Hello and welcome to the latest edition of China Inc. by Bamboo Works, where we discuss the latest business and financial news from China and what it all means. I'm Doug Young, Bamboo Works Editor-in-Chief, and I'm joined today by Renee Vangusten, one of our founding partners, who's also a longtime China watcher and former investment banker. Today we'll look at some collateral damage coming from China's property meltdown, this time in the building materials sector. We'll also look at one of the biggest extended rallies for offshore China stocks in more than 2 years and try to figure out what's behind it. We'll start with a couple of data points from the building materials sector that show just how badly this group is getting hit by China's property meltdown. Data from China's main steel association shows the sector's profits fell by half in the first quarter, while the average profit margin stood at just above zero. In the other instance, Asia Cement also reported slipping into the red during the quarter, though its profits have been dropping steadily since peaking in 2019. So, Renee, there's been plenty of talk about what might happen to the many developers who are flirting with insolvency, but much less is being said about these construction material companies, many of which are state-owned. Do you think their situation is going to ultimately become as bad as the property developers?
I think so. I mean, it's not for those companies. It's not just the real estate sector that obviously has contributed to their business. It's also, a lot of the infrastructure investments that have happened in China at various levels of government, central, provincial, local, and so on. So if you're like in the cement business or, other aspects of construction, you obviously benefited for many, many years from extraordinary development in the state sector, but you also benefited from all the infrastructure projects that went on as the country built itself up. There's obviously, as we know, less support these to them from the real estate sector, but there are also fewer infrastructure projects, even though the government has been pushing some of them more recently in an effort to help the economy, but it's not as good as it was, before COVID, let's say. So they're being hit, I think, from those two sides at the same time.
Right. Actually, in the steel story, it's interesting what you said. At the steel press conference where they gave out these numbers, they actually did say that local governments are slowing down their infrastructure spending, and they cited that as one of the reasons for the steel issues. I mean, is this the beginning of something new? I mean, everything we've seen up till now is that China sort of holds nothing back when it comes to infrastructure spending, but they seem to be indicating that suddenly controlling debt for these local governments has become a bigger priority. And do you think that's going to stay the same, or what's happening there?
Well, I think that there's a limit, no matter what, to how many airports you can build and how many train
Especially when there's
stations.
only 5 flights a day. Yeah.
Right, and how many train stations you can build and so on. And a lot of them have been built. How many miles of highway and all of those big infrastructure projects. So there's a limit to that, first of all. Secondly, yes, I mean, we all know that provinces and municipalities have had an issue with fast growing debt, which in many cases has ran unchecked for a long, long time, and they're hurting financially. The debt is pretty substantial for a lot of them. Their revenues are lower now in part because of lower revenues from land sales as a result of what has happened to the real estate sector and so on. So yeah, many of them and actually have been told by the central government that they should manage their finances
Mhm.
better, and that implies, cutting down on projects, especially I think the way that it has been described is a vanity projects, but projects, infrastructure projects in general.
Mhm. All those white elephants sitting out there, those empty office buildings and so
Right.
forth.
And airports that, as you mentioned, have very little traffic, and some train stations that have very little utilization as well. So the country needs to absorb that first. They probably will have to write off some of those because I think that especially in poorer provinces, some of the projects will never become profitable.
Right, right. Well, I mean, so going back to sort of these construction material companies, I mean, we've seen Beijing taking some steps to try and stabilize the property market and, even assist some of these developers by telling banks to, help them, give them financing for their, to finish some of their projects and maybe roll over some of their debt payments and stuff. None of those has really showed that much result so far, but do you see these construction material companies, like I said, Asia Cement started officially losing money in the first quarter of the year. I mean, the steel makers, I think a lot of them are probably already losing money. Do you see the government stepping in to bail these guys out, or do you think their situation probably won't deteriorate quite as much as the developers?
Well, some yes and some no. I think, first of all, as you correctly mentioned, a number of those SOEs, which basically means owned by the government, most of the time central government, sometimes provincial and municipal governments.
Mm-hmm.
So there are measures there that the governments can take to basically improve the situation, such as, merging or forcing the merger of some of those SOE government-owned companies in order to prevent bankruptcies and so on. But that's kind of that's at the level of the big companies primarily. There are a lot of smaller companies in that overall in those industries that that, as I mentioned, are smaller, are very often privately owned and so on. I think that some of those will actually disappear. I don't think that they will all be able to survive. I don't think that many of them will get meaningful help from the government.
Mm-hmm.
Maybe at the local level in order to protect jobs, but there will be damage in that category in particular. Now, there are differences, though. You mentioned cement and you mentioned steel. There's a difference between the two. The Chinese steel industry, once again, is basically, in part because of this, a slowdown in real estate and in infrastructure projects is viewed as being plagued with substantial overcapacity, which has pushed prices down, but also has actually caused a lot of them to, seek salvation in exporting. And that has started to create problems with a number of countries, especially Europe and the US, and accusations of dumping and the imposition of tariffs, which in some cases, from what I know, have reached 30%. So I think that generally speaking, the Chinese government needs to do something to rein in that at least the substantial portion of that overcapacity in the steel industry,
Mm-hmm.
in order to avoid problems both domestically but also internationally.
Right, right. They're gonna have to somehow reduce the capacity, and looking at companies like Asia Cement, maybe this ain't the best time to be buying that kind of a stock. But anyhow, that actually takes us into our next thing, which is actually Asia Cement may not be doing too well, but China stocks in general have been doing quite well in the last few weeks. So we're going to look at this extended rally for China stocks in the U.S. and Hong Kong, and try to figure out what's behind it. The Hang Seng China Enterprises Index rose 4.4% last week, and the broader Hang Seng rose 4.7%. Now, the big gain for the Hang Seng China Enterprises Index, which is sort of a good bellwether for China stocks overseas, is now well into bull territory. It's up about 31% from its recent low in late January. And that's, everyone knows, or most people know, that anything above 20% is officially considered bull market. The broader Hang Seng also crossed into bull territory last week, and it's up 23% from its January low. So, There wasn't really any major news in the market last week, though there were a couple small positive signals a week earlier. One of those saw UBS make a rare upgrade to its recommendation for China stocks to overweight, which basically means it was telling people to buy the stocks. And the other one that I noticed, I saw an analyst who put a sell rating on disgraced real estate developer Evergrande 2 years ago, say he now expects China's real estate market to start recovering soon. Are these small signals like this driving the rally, or is it something else, or what do you think there?
Well, I think that if we go back a month to and a half, there has been a succession of economic news that have pointed to overall improvement. It's not necessarily on a straight upward line. Sometimes the news are very good, sometimes it pulls back a bit, and so. But generally speaking, there's a feeling, a sentiment that the economy will start performing better later in the year. Primarily, I think, on the back of Chinese government measures that they take step by step. And, exports have been rebounding. Industrial production has been going up, although I think it pulled back a little bit last month. But so that's what you have on one hand. On the other hand, a number of people in the market have for several months now talked about the fact that Chinese stocks are substantially undervalued overall, I think, as a class, and by comparison, in particular to US, India, and Japan, more than in comparison with Europe, although Europe seems to be starting to bounce back a bit. So the market has never been short of people who at some point in time believe that getting in early in something that is undervalued will pay off tremendously. And I think that that's what we started to see a few months ago. It was relatively small, and then you add a bit, and then I think that that's what is happening right now.
Mm-hmm.
Investors in the business of making money. Number one, investors usually have a pretty short, limited memory. They get hurt, they feel it badly, time goes by, an opportunity occurs that they believe will help them make money, and they go. And, this is against the background of, if you look at 22, 23, global investors losing a lot of money, talking billions and billions of dollars, Chinese stocks, as a result of government crackdowns and weakness in particular on the consumption side in the domestic economy. But, today is a different day. I mean,
Sounds like Scarlett O'Hara. Another day.
March, April, May of 2024, that's a different time. Chinese stocks are undervalued, especially on a relative basis. So why don't we put some money into it? And I think that's how you get to where we are today. I think that the performance of the Chinese economy, if you look at post-pandemic, is patchy somewhat. And even if you look at it today, parts of it doing pretty well. I think SOEs in general are doing okay, at least all those that are in line with government policy and government stimulus steps. But consumption remains weak. Consumer sentiment has not fully recovered. And, when I talk to a lot of people in China, pretty much everybody I talk to is very cautious about how they're spending money and how much they're spending overall, let's say on a monthly basis compared to 2, 3 years ago. So that part of the economy has not recovered it up to expectations. And I think it's a big question mark as to how well the economy overall is going to perform for the rest of this year. But I would say it's on the uptrend. And obviously some people believe that and believe that it's going to get better.
Okay. Well, quick question, just to round this out, because a lot of our listeners probably follow the whole IPO market. There's just been no or very few blockbuster China IPOs, really over the last couple of years. But we have seen a few big names, well, one or two big names trickling back into the market. One was that EV maker Zeekr in New York, and then we actually wrote about another one called Heidi Lao. Well, not Heidi Lao, but that's the big hot pot chain, but their international unit just filed to do an IPO in New York. I mean, do you see a pickup? I mean, there's got to be lots of companies that are, have been wanting to list over the last couple of years, but haven't. Do you see things finally picking up? And, if this investor sentiment keeps up over the next few months?
Well, I think it's still early to tell, and I think it also depends on, I think it's also company and sector specific. I'm a little bit puzzled by this Zeekr IPO. 3-4 months ago, articles that I read were talking about raising $1 billion, and I didn't think it would ever happen. Then more recently, I think articles are talking about something like $400 million IPO. And then I just read an article that said that Geely, its parent company, is going to buy, I think, $300 or $320 million in the IPO in order to shore up its ownership. And I have not been able to find a way to tie all these numbers together, whether the Geely part would be in addition to the 300 to 400 million or part of it. Zeekr is going to market at a time where the EV sector in China is doing okay in terms of number of sales, but not doing okay in terms of revenues, pricing, revenues, and profits. This is just another somewhat major Chinese EV losing money, Chinese EV manufacturing company producer going to the US market where you already have at least 3 pretty much money losing Chinese EV maker companies. So, who needs, you could raise the question, I raised the question, who needs another one? In the US market today, you have Li Auto, which is, I think, somewhat profitable, although they must be suffering also right now from the price war. NIO and Xiaopeng, which are losing money and have been losing money all along. Do you really need a fourth one? So I don't know. The market will answer that question, and we'll see. But it's obviously a tough sector for anybody coming from China to the market, whether it's New York or Hong Kong, overseas market, and look for money. Market will decide in time.
Okay. All right. Well, we'll have to see if this rally keeps going. I'm a bit skeptical, but 20, 30% is nothing to sneeze about. Anyhow, let's wrap it up there. Thanks everybody for joining us this week. In our next program, we'll look at a new EU investigation into the openness of China's medical devices procurement market, and we'll also look at a new IPO application that's aimed at the used car market. If you like what you hear, please tell your friends about us and rate us and share us on your favorite podcast app. Meantime, hope to see you all next week. Goodbye for now.
Goodbye. Thank you all.